globalization indicates the globalization indicates the firms which are moving or crossing the boundaries, and basically they are dealing on international levels. So liberalization, we have reduced the conditions, we have reduced the norms, and we are motivated to have more and more people in different domains. And this way, we are motivating the participation. We are motivating the more industrialization. Like I said earlier, we are most doing agricultural products and processing of agricultural products. Now we are switched about agriculture to the agro process industry and so forth and so on. In privatization, I have motivated the private players where they can construct, build, and hand over. The better example is all the toll roads which are constructed, they mostly on construct, build, and hand over. Then the third phase happens to be globalization. In third phase, what we achieve in globalization, there is the integration of world economy, and the foreign players they play a direct role where they are start investing in fixed assets along with the holding pattern of companies. So in globalization, we see the integration of many economies in together. The companies, the organizations, and the structure will change rapidly. Instead of focusing on a single country, single product, we'll find diversified approach where the firms are getting the things. In globalization, the organization achieved a great success by means of integrating the worldwide application of knowledge, resources, and try to use maximum things for optimization of profits. According to International Monetary Fund, the growing economic interdependence of countries worldwide through increasing volume and variety of cross-border transactions in goods and service and of international capital cash flows and through more rapid widespread diffusion of technology. Now, what are the contents here the International Monetary Fund is saying? Now, who is the International Monetary Fund? International Monetary Fund is that fund which provides borrowings in dollars and repayments in terms of own currency. India is founder member of this fund, and this fund has a very crucial role to help the countries to manage their imbalance, manage their issues about balance of payment, help the countries for financing and refinancing activities regarding international trade, as well as it plays a very crucial role as advisory board, advisory person to focus about the economic growth and welfare. So, as per them, what is globalization? It's economic interdependence, variety of cross-border transactions, and international capital cash flows, and widespread diffusion of technology. So, the feature one, the feature two, the feature three, and the feature four. The first thing I'm talks about globalization means economic interdependence of more than one country. So when we enter into multiple agreements, like unilateral, bilateral, and multilateral. Now, what is unilateral? Uni means one, bi means two, and multilateral means more than two. So, in any countries, they enter into agreements for mutual benefits where they agree to share, spread, and meet with some economic conditions which are in their negotiated favorable way. Then, in this case, they are called as economic interdependence. For example, we are exporting agro products to OPEC countries, and OPEC countries are giving us the energy resources. We are exporting to European countries different machinery and agricultural items, whereas engineering goods and technology is shared by them to the India. So it's a mutual benefits, mutual coordination, and mutual understanding we extended by different agreements, by way of different cartels, by way of different associations like G7, G20, Economic Forum, Asian Forum, SAARC countries, and so on. We are working on interdependency to get the mutual benefit. Something India can make it, something China can do it, some things Taiwan can do it. So we are proposing to give an advantage what I have and what other person don't, so that that other person can supply me those goods and he will encash the popularity or the advantage I'm having. And that is one globalization. The second meaning of globalization is variety of cross-border transactions, including goods and service. So as per this, when multiple diffusion of various goods and service across the border, it is recognized as globalization. The third meaning is international capital cash flow. Now, as per this concept, the financing and refinancing activities are not restricted within the boundary of that nation, particular place. Across the boundary, the multiple countries, companies, they are involved in cash flow operations, that is capital financing, contribution to the venture capital, contribution to the project, refinancing, or giving direct loans. So these all activities, when we are observed, it is recognized as globalization. And last, when the growing economies are benefited by developed nations' technology, the poor countries are getting advantage of enhanced skills by multinational companies. It is called globalization. So, in short, interdependence of countries where they will share the technology and advantages, and this sharing of resources across the globe is called globalization. So, in short, interdependence countries when share the resources across the globe, it will be defined as globalization. Please read this definition. I'll wait for 1 minute. So, when a countries after privatization, they open the doors for their own country's private companies. Similar way, when I open the doors for the global companies to compete, to succeed, and to contribute for socio-economic and economic dependencies, it is called a globalization. Now, what are the features of globalization? As the name suggests, globalization indicates moving global. So we normally say think local, act special, and go global. So what is meaning? What are the products? What are the service? I need to observe the global benchmarks. I need to ensure the capitalizing over the success I'm having and benefiting the advantage which I used to get. There are three types of advantage. One, absolute advantage. Second, competitive advantage. And third is cost effective advantage. What is the first absolute advantage? In case of absolute advantage, there are suppose two nations, country A and country B. In absolute advantage, country A can produce that things, whereas country B is unable to produce that things. Then whomsoever want to purchase the thing, only A can supply. So in this case, only A can supply to B, A can supply to C, and A can supply to D, and so forth, so on. So one can do it, other country cannot do it. It's called absolute advantage. In reverse, suppose there are two countries, A and B. Now here, when they are talking about the production, A can produce the thing in 20 rupees and B can produce the thing in 30 rupees. So this way, A has an advantage that they can produce the goods comparatively in less price, and so they are beneficial. Whereas B can supply in the market, but the cost of production is high. And when customers are demanding products, we understood the demand for A products will be more because same product is getting at cheaper price. Once A is unable to produce or meet the demand, then people can think about B. But since A has a cost advantage, it will be exporting more, and B will be also exporting, but comparatively less. So we are done with the absolute advantage and comparative advantage. And now let's talk about the competitive advantage. Now, the competitive advantage, it always talks about the two things. One, it talks about price. It talks about price. Second, as competitive advantage, it talks about location. Then third, it talks about technology. And in the last, it talks about raw material. So if the A has advantage of price, location, and technology, then A has three advantages. So he can capture in three advantages. But if suppose the B has advantage of raw material, so he has one advantage. So when it comes to the international negotiations for supply, A has 30%, whereas B has 10%. So when a market is compared, the 75% market is influenced by A. So if anybody want to price, anybody want technology, go with the A. Anybody want the raw material, they can go with the B. So this is called as a theory of globalization. Why the firms and go for the globalization. Now the other thing, the globalization is extension of your domestic trade to an international level. So now the buyers will get an alternate options when they go for the globalization. Now you have one or two company. When I go for the globalization, I have more than one resource. When I want to buy the things, for example, earlier in India, we have Maruti, Mahindra, Hindustan Motors, a limited options. Now we have Jaguars, we have Mercedes, we have Audi, and so forth and so on. So the brands are coming in India, options are available. Earlier, we used to get television where we used to watch everything, movies on, etc. And the channel was DD National or Sahyadri. So earlier, the TV channels was very limited. But when we allowed the private people, we allowed the multinational companies, then we came across various channels. Now channels are shifted to the various apps. Now we shifted to the IP-based TV. And this is thing happening because we are getting the technology integration, that is diffusion of technology. And the second advantage, we are getting variety of options for workouts. Since the competition is fair enough and multiple options are available, the advantage to the customers that their terms of negotiations are good, they are getting quality products, and the advantage is they are having the competitive market where the customer will become king. And instead of just selling the product, the service, the support, and care, these are added value to my sales. So the feature of globalization over the normal is it is extension of local market where the buyers are having variety of options to trade about, to deal about, and take the benefit of available variety. I'll wait for 1 minute. Please go through the slide. Okay, let's move on further. What are the foreign entry market strategies? Now, I just keep this part because we're going to cover in the coming unit. Okay. What are the pros and cons of globalization? When anything is there, it has certain advantages and certain limitations. Some things are positive, some things are limited. Now, if I'm getting a wide spread of resources, if I'm getting variety of options, then in such case, I have also limitations because when multinational company came, they came with motto of profits, motto of using technology and capitalizing on tap markets. So let's understand the first benefits. When globalization starts, the flow of capital is received. More and more productive activities will start. This will enhance the level of employment and ultimately we are also getting the quality products which enhance the living standard. When the multinational company came, their main motive is the profit by way of operational efficiency. And this efficiency is achieved by standardization and industrialization. So my local companies are getting an options. My local companies are getting a channel where they will understand the flow of technology and the things where they can improvise or grow. So, in short, the local companies are feeling competition, so they will improve the performance. The local companies will go through the different technologies and the process adopted by multinational companies. So they will change their nature and they will become more global and competitive to survive in the market. The globalization is providing an alternate source of my raw material or resources. So all my resources will become competitive and they have multiple options for payment. The globalization helps to attract multinational companies to produce locally. So this way, the globalization benefits for channelization of capital and creating pool of reserves of foreign exchange. High quality, variety, and availability is the feature which the economy enjoys when the companies go for the globalization. When I have more international companies coming to India and sharing their technology, sharing their expertise, I certainly have advantage about their balanced development where because of this, the more technical upgradation, enhancement and promotion, my human capital will be more polished, more developed and more competitive. Similarly, when more globalization happens, the things and economies boom, the government has advantage of less resource for socio-economic growth and instead of concentrating or focusing on industrialization, promotion industry, they can switch their focus to social activities. So balance economic growth and flow of economical capitals is achieved through globalization. We find the globalization leads to stabilize the country's balance of payment, trade blocks, and strengthen the relation with multinational nations for long-term associations. So in short, the globalization enhance and alternate options for products and services for increase in total capital employed and cost in general. Just go through these benefits. Let's move on further. What are negative benefits? The first and fear exposing to competition. Now here, in case of globalization, the domestic industries, if they are still in development phase and we open the market for multinational giants, they will surpass my local industries and they will take over the possible opportunities. So government has to adopt the phase out globalization. It is something that your kid is just learning to walk and you expose him to the Olympic. In Olympic, there are experts, there are practice perfect peoples, and they will just exploit the local companies. Globalization leads to exploitation of resources. It can be a land, it can be labor, it can be capital. Many times, these multinational global companies, they are economic giants and they can influence the legalities and they can create a wide gap between poor and rich people, influencing and creating socio-economic disturbances. We have an historical learnings that the French, British, and Dutch people walking in India for trade, and they has done the colonial effects. So again, the globalization has this fear. Many times, the globalization leads to over dependency on global companies. This over dependency is always an harmful effect because this over dependency sometimes find a bottleneck in the development because when I'm too much dependent on international companies, their approaches, their vision, their policy makes an creative, impactful statement about my growth and ambition. The most of the multinational companies are targeted toward the profit making. So there is an always issue about socio-economic balance as well as there is always a concern about protecting the local atmosphere, pollution, resources, and reciprocate benefits to the society where the organization are starting their ventures. So these are the certain negative major effects of globalization. Please go through this slide. I'll wait for 1 minute. If you have doubt, you can just put in chat box. Please read the slide. Done. So no doubts. Let's move on. So liberalization, privatization, and globalization. This is chain of actions and reactions where to meet an global competitive field, to keep the tempo of development, the country need to operate alone. In liberation, I will change the norms, change the conditions, and change the procedures and formats which are crucial and essential for industrialization. In privatization, I will motivate more and more private equity, private partnership, private contribution towards economic development. And in globalization, I invite the multinational companies, multinational giants to contribute in effort to develop the nation, develop the infrastructure, and develop the employment percentage in that particular country. So this is all about globalization, privatization, and so on. Any doubts? Any doubts? I
No, sir.
guess no doubts. Please remember, when you're talking about globalization in your examination, it is very crucial to understand the meaning of globalization. Now, let's further move on and understand the dimensions of globalization. Now, what is mean by dimension of globalization? Dimension means how it is affecting your side, how it is making an influence. The first thing globalization makes is economic efforts. Economic effects talk about your pay skills. Economic effort talks about valuation of the human capital. Economic efforts talks about the wage rate or the amount of zeros plus or minus towards your salary. The second effect of globalization is on cultural globalization, where the religious mix, the cultural mix, the beliefs, the trust, they are interchanged and shared. For example, 10 to 15 years back, or rather we can take 10 years back, when it was Christmas, many people do not know how to celebrate. And now the people are enjoying each festival. They understand Halloween festival in India. They understand Diwali festival in US. They understand the Ganpati festival even in Dubai. So this cultural mix is happened due to globalization. Environmental issues are much more serious and concerned because the companies which are banned in developed nation, this go and exploit developing or underdeveloped countries because they are still don't have laws and they are in need of international companies. Whereas the companies operating in developed nation, they are helping by CSR funds and technological assistance to their domestic countries to reduce the burden over environmental issues. The globalization has a very deep effect of political system because of socio-economic power. They try to influence the local decisions, creating favorable situations which may affect the moral, the values and ethics of local trade and transactions. So, in short, globalization is multi-diverse, unavoidable synchronization where people are working and benefiting towards the goal congruence and they are reciprocating their advantage across the globe. So these are certain dimensions of globalization: political, economic, environment, cultural, and social, and technology. Now, when I say dimensions, you need to talk how the globalization is making an impact. So, in examination, if the question is there, what are dimensions of globalization? You should talk about technology, political, economic, environment, cultural, and social aspects. So, I'm not going dimension more in detail, but just to understand, when you write an examination, please remember these three things. What is the first? The first is a forum for South Asian countries where the US has lead and combined agreement against China. The first image you see is G7. Second image you are seeing is SAARC countries, and third is G20. So this is an example how globalization is making an effect, how globalization is playing a vital role for a global decision making and understanding. So this is overall about liberalization, privatization, and globalization. Now let's go and understand what is international financial system. So let me share the other PPT. Okay, so far in LPG model, anybody has any doubt? If doubt, please post in chat box. I'll wait for 1 minute. I think no doubts. Now there are a chapter called Theories of Globalization, but for your syllabus, it is not expected to go in that deep to understand theories of globalization. So I'm not moving further. Let's move on the next part of your syllabus. In your syllabus, in the first unit, we have meaning importance, scope of globalization. Then we're to discuss about goals of international finance, structure of global financial system, and the globalization process. So we have covered the LPG model, that is globalization process. We have covered the meaning, scope, and importance of international finance. We'll now discuss about the international financial system as a summary, and then we'll start discussing about evolution of international monetary system. Then we're to discuss about international monetary fund, world banks, and credit rations. And this will finish our first unit. So let's continue. International finance is an important integral part of financial economics, which deals with the various trade activities, various issues, and various theories where the economics is integrated with finance and it deals where about the trade or issues on global level. So when we mainly discuss the monetary transactions or issues related to fund sharing, fund allocation of more than one country or at least two countries, it is called as a international finance. In international finance, we majorly concern about the exchange rates. We majorly concern about the FIS, that is foreign institutional investors. We are majorly concerned about foreign direct investments, and we are associated about trade bargainings, trade permissions, and different theories of international trade. The theoretically, we can say the international financial system is the system of transfer of money between the savers, that is investors, and borrowers. So when I say the international savers or investors and international borrowers, then it's a international finance system. The clumsy definition, it is said the international finance is set of complex and closely interconnected financial institutions, markets, instruments, services, practices, and transactions. So, where the demand for money is catered by supply of pool of money on global level, it is recognized as international financial system. So, when the financial system set the rules, procedures, and track the activities on global level, I can define it as international finance. The global finance system is a borderless, complex operations between more than one nations where the cross-border needs and excess cash they are shared to encompasses of various institutions, borrowers and lenders to work and operate cohesively in different sectors, different domains as per agreed terms and conditions on international level. So, what is global financial system? Before I explain, I suggest go through this slide. Okay, I'll wait for one moment. So let's talk about global financial system. Global financial system is comprised of the institutions, regulators, and traders who deals with international currency and cash flow of international currency. So it consists of banks, international monetary funds, different national agencies and government departments like central banks and private institutions acting on global level for their financial needs. It can be a hedging, it can be risk management, it can be the current financial needs, and so forth and so on. So when the global institutions, global monetary fund, the global money lenders, they contribute together for across the globe financial requirements, direct and indirect supply. It is called as a global financial system. What are the elements of a financial system? The elements of financial system are money, banking and financial institution, financial market, financial instruments, and financial services. I think most of the things are known to you. The only thing is the financial services. For international level, there are different services than the national level or domestic. On international level, I required balance of payments, international credit agencies, the collateral trade agreement companies, the shipping companies, the global deposit receipt, American deposit receipt. So these are the only new terms. Otherwise, most of these things you know as a part of financial system. So I'll just keep this part. Okay. Let's talk about the crucial part of Unit 1, the financial institution. Now, what is a financial institution? Financial institution talks about the organizations which are contributing directly or indirectly in international trade. So, the International Monetary Fund, IBRD, IDA, central banks of different nations, the non-banking financial institutions, these are certain institutions which are very crucial in global financial system. So there is a two classifications of various institutions. One, regulatory institutions, and second is intermediary institutions. The regulatory institutions are understood as they are basically institutions who are controlling the international trade, who are regulating the international trade, and who are managing resources in more favorable conditions or more favorable way. Whereas the intermediaries are those organizations which are working as an agent or as a helping hand for operation of global financial system. So I'll just introduce one by one in short the first regulatory institutions and then we'll talk about the intermediaries. The first is Reserve Bank of India. Reserve Bank of India is lender's last resort. It contributes in international trade by means of supplying funds, by providing and channelizing the export import, by financing, technical guidance, controlling the flow, and limiting the level of operations. Then we got Securities and Exchange Board of India. This board has a role in international finance that they need to create a norm and process for international financial institutions to participate in share market, to control the limits and type of share participation, as well as the SEBI has active role to pursue the rules and norms which has company has to follow when they want to list their company in India. Then we have Central Board of Direct Taxes. So in short, we recognize this as income tax. So this board of directors has a rule or a benchmark set process where they will talk about the residential status of international companies and their tax liabilities. They also need to find out the trace of income and expenditure of this type of institutions and control them for avoiding the economic disturbance in nation. In the last, we got Central Board of Excise and Customs. Now we recognize this board as GST. So they control the flow of goods and service and they ascertain and calculate the tax liabilities for their goods and service supply in the local market. So moreover, the regulatory institutions are specially acted institutions which they are dominating in a particular domain to control, to regulate, and to normalize the growth of products and services. So let's move on to the intermediaries. If you see, the list of intermediaries is too high. So I'll just introduce one by one. First, I'll take a pause of 1 minute. You go through the list, then I'll start discussion. So let's continue with the one by one. Unit Trust of India is an institution which guarantees and operates the international mutual funds and their schemes in India. The Securities Trading Corporation of India Limited, it talks about materialization of different shares of Indian listed companies abroad and the multinational companies in India. Industrial Development Bank of India, it is contributing in the area of sickness units and promoting of entrepreneurship. So whenever the multinational companies are entering into joint ventures, takeovers, or an association with domestic companies, they provide help by means of guidance, by means of financing and refinancing their activities. The Industrial Construction Bank of India, now known as Industrial Investment Bank of India, they are one of the prime source of funding the multinational organizations and various Indian organizations to go globally. They have a dominance role for providing the risky capital or venture capital for different turnkey projects for a longer duration. Then we have Export Import Bank of India. In Pune, we got their office near Seven Love Chowk. They got a branch at Gole Road in Pune. The role of Export Import Bank of India is provide funding, provide bank guarantee, and issue the letter of credit as and when required in case of international trade. They are also considered as technical consultants for getting documentation and understanding technicalities in international trade. Then we have Small and Development Bank of India. This bank is associated with jute, cotton, associated with cooperative and MSMEs where capital is less than 20 crores for promoting their effective contribution in financial market. Then we have National Bank for Agriculture and Rural Development. Basically, this is an apex organization which controls the RRBs, that is regional rural banks, and flow of banking in rural level. NABARD is also considered as one of the branch of RBI handling a specialized agriculture and rural development. So while setting the companies or while going global, they will assist the technical and financial expertise guidance to the companies. The life insurance corporation now it is outdated, so we'll omit this. So directly come to the Shipping Credit and Investment Corporation of India. Now, why Life and General Insurance Corporation outdated? Because since 1998, these two bodies are not only contributors, but we have multiple contributors in insurance. And that's why instead of going with these two, I'll just take insurance as one of the sector. Then we have we have Shipping Credits and Investment Corporation of India, Company of India. This shipping credit and investment company is authorized for providing the financial needs of Indian exporters and importers, where they can issue the goods in local market with a bond or advance duty payments. In case of export, they can create credit the bonds and duties, and they can export without paying any duty. So basically, the Shipping Credit and Investment Corporation, company, has a financing and refinancing role when the letter of credit or bills of exchange in international trade are settled out. Then we have National Housing Bank. It has an active role in consultancy and controlling the international players' contribution indirectly the real estate sector of India. Now, this was classification based on direct participating and regulators. The another classification is banking and non-banking. So there are some companies which are banking companies which are participating in international finance, whereas there are some companies which are participating in there are some non-banking institutions which are participating in international finance. So we'll just go through the list. So the banking institutions are nothing but the banks, but these are the list of non-banking institutions participating in international finance. Already we are knowing the things. I'll just wait for 1 minute. You go through the slide. So non-banking we have the companies like agriculture, industrials, hire purchase, chit funds, and insurance, so forth, so on. So we discussed already much more companies, so I'll just move further. Then we have all India institutions like Industrial Finance Corporation of India and others. Most important, let's understand the financial market. Basically, to define a market, market is a place where buyers and sellers they come together to satisfy their mutual needs. Buyer is intended to get the resources or raw material for his desired action, whereas the sellers are interested to encash their excessive availability of resources or funds for over the period. So, in short, in financial market, people are investing or people are searching for opportunities to get the funds for their ventures, agreements, and trade activities where they are dealing on international level. So the financial institutions or financial market, they are divided into two types majorly. One is money market and second is the capital market. They are further classified as primary market and second market. Now here, money market is that market which deals with money and near money. Normally, money market is considered as closed interbanking or commercial institution market where the excessive liquidity is shared with the needy institutions and short-term credits are provided or very short-term loans are provided based on call rates. Whereas the capital market is talk about the FDI investments, and their trades. The primary market means the market which is for a new or fresh shares, whereas secondary market is a trade market where already existing company shares and their equities are being traded. So it's 9 o'clock. So let's stop for the day. Tomorrow morning there are sessions from 6 a.m. So don't miss any sessions and attend all the sessions. Thank you all of you for being part of this session. We'll meet again tomorrow for international finance at 8 p.m. Now you can log out from the meeting. Thank you.